start again. So I was talking about real estate investment trusts, and I said it works like mutual funds, and it pulls funds together from people solely for investment into properties, right? So if you check the portfolio of a REIT, these are the properties that you will find, or these are, because when they say that REIT invest in properties, it is not limited to residential or commercial properties alone. We have things like, or infrastructures like apartment complexes, data centers, healthcare facilities, hotels, infrastructure in the form of fiber cables, cell towers, energy pipelines, office buildings, retail centers, self-storage, timberland, and warehouses. So these are some of the properties that you would find in a typical REIT portfolio. So these are some of the REITs in Nigeria. The same thing you guys did for ETF. Can we do that for you, for these guys too? So these are the 3 REITs that are currently listed on the stock exchange. When I did this slide, it was 3 naira 55 units, but 3 naira 55 kobo per unit for UPDC. Union Homes was 36 naira 60 kobo. SFS was 92 naira 15. So let's check what the current prices are now. And I was saying something about when I saw the price that you guys shared for the ETF before I was cut off. I said investment is something we shouldn't take lightly. We should invest and invest long term. When we have long term in our heart, it always works. You guys just told me, you guys told me, not me. You checked it and told me that Stanbic 30 is now 850 naira, right? This was what was sold at, was selling at 3 naira, was selling at 381 naira few months ago. This slide is less than 6 months. I did it 5 months ago. So if 5 months ago it was 381, today it is 850. You can see the massive growth that has happened for anyone who has investment in this portfolio. So investment is still the way to go. Please don't joke with So I'm waiting for you guys to show me the price, the new prices for the rate. Who is checking the price of the rate? I can't see the picture you are sending, okay? They just tell us, just type the price. I can't see it. Just type the price. I can't see. It's too small. Okay, UPDC is 5.5. Yeah. How much was it when we did this slide? So it has gone up by 2 naira. Okay, excellent. How much is Union Homes? Union Homes is now 36 naira. That one has gone up by, okay, still the same. How much is the last one? Okay, while we're checking that, let me continue. I think the last part of the slide is REIGs. So REITs is Real Estate Investment Group. It's a business that concentrates much of its efforts and capital on real estate. Think about it. If you have ever seen any real estate company that has a program where they tell you to invest and then you get return, invest and then you get return, which is not that you should buy land. There are times that they will sell land to you and they give you a payment plan. But there are other times that they tell you to invest and they'll give you return. So a lot of those structure would normally fall under REITs. It's a real estate investment groups, right? Unlike REIT, REIT needs to be registered with SEC, approved for it to be on the stock exchange. And once you're on the stock exchange, it means your financials must be submitted, audited every year. You are not running a practice that is shadow, that's under the shadow that nobody can see. Your affairs become public. That is what is one of the differentiating factor between REITs and REITs. I think we'll still get there. A model built for profit. REIT may choose to buy, renovate, sell, or finance properties. So you can come together. This is what I advise people. You can come together with your friends and you guys can buy properties. You can jointly invest into properties. You can collaborate with your friends. Put yourself into groups and develop rental properties, develop resorts, develop real estate apartments, develop hostels, maybe because a lot of times, if you are waiting to be able to afford or do things on your own by yourself, you are not going to be able to maximize wealth. I'm sorry for all the noise at the background. I'm home. I'm in Lagos. And once I'm in Lagos, this chaos is bound to be happening. Sorry. Okay, so it's a model built for profit. REITs may choose to buy, renovate, sell, or finance properties. Real estate investment groups commonly buy multi-unit properties, sell units to investors, and take over administration and maintenance of the property. So what this is saying essentially is it is possible for you to put yourself in groups. You invest in real estate properties. You don't just invest, you manage, maintain the property, and whatever return comes from there is shared among the investors. It is high time people started to do these things, put themselves together in group and invest. Friendship is not really about just going out to eat or just gossiping, sitting and cheating and chatting, chit-chatting and all of that. That is part of it. But another part of it is friends are supposed to now build wealth together. And this is what real estate investment group affords you the opportunity to do. So let's see more points about REITs. REITs may buy stakes in apartment buildings, rental properties, commercial buildings, or commercial units. Some REITs are structured as crowdfunding platforms. They raise money from members of the public to buy real estate. I've just mentioned that. You probably have seen an ad, maybe from any of the apps that you use, where you see a real estate company attempting to crowdfund, raise money to develop properties, and then they give you return on your own investment. So what's the difference between REITs and REITs? REITs and REITs are both vehicles for investing in real estate. That's the similarity. But they have different structures and operating methods. REITs are generally more liquid than REITs because they are traded on major stock exchanges. That's quite clear. Because they are traded on stock exchange, they have more money. They can get liquidity, means they have access to more money. Once, by virtue of being on the public market, that is the public quoted market, you have access to funds from the public than a REIT that is just maybe a group of friends or a group of investors that just come together to develop properties and then maximize the opportunity, right? While REITs could require a longer capital commitment since they involve direct investment in physical properties, right? So when you're buying the unit of a REIT, You don't know, like now, I have REITs in Union Homes. I don't know where any of the property is. I don't, honestly. But if you are doing REITs, you would know where the property is because it's a physical property you are investing in, right? Even if you see a crowdfunding platform, they will tell you about the property. They will tell you maybe a property in Lekki, a property in Ajah, that's what they are developing and all of that. They will give you all those details in a REITs arrangement. REITs may offer more direct control over investment decisions. Like I said, if you form a REITs with your friends, the direct control is under you, the administration is under you, the management is under you, right? So you are a key person or a key individual in every decision that will be made regarding the properties that you have invested in. While REITs are managed by a professional team that makes all the investment decisions. It's clear. Then the last part is REITs are highly regulated and must follow SEC regulations, including, I think I mentioned this before, disclosing financials and providing 90% of profits as dividends. You see, so all the profits made by REITs, by a REIT company, 90% of it must be declared as dividend, must be shared amongst holders of units in that portfolio, in that asset. Why REITs are not? Okay, excellent. That is the end of the class. It's just been an up and down class today. So if you have questions based on what we have shared, please feel free to drop your question. If you want to talk, let me know. Raise your hands so I can ask you to unmute, and then you can ask your questions. Okay, don't forget, I said I want us to leave this class by maximum 12:30. Where can you buy it? You can buy it on the floor of the stock exchange, the same way. You guys someone just check the prices of the REITs now on the platform on your app. The same way you buy stock, in the same way you buy REIT and ETF. Okay. Where are you people checking the price of REIT? You are supposed to check it on your own app. If you have a company, if you already have a stockbroking account, just go to your account, log in, you would just put REITs, search, put REITs, you will see it there, right? Or NGX is also the easiest place and the best place to also check. Just go to NGX websites and check. So let's do Presh. Presh, you can ask your question. You can unmute and ask your question. Presh, you're not talking. No, I can't hear anything. Okay, I think Presh is not ready to talk. I can't hear anything. Olorire, you can talk.
Good morning, sir.
Morning.
Essentially, it is first of all an appreciation note or an appreciation, really. I really want to say very, very good thank you to you because this class has been an amazing one. I mean, I am way more enlightened than I was before. I've been on this journey for like 4 years now, and I never understood what I was doing. So thank you so much. I'm really grateful. Thank you. God bless you. And now my question. So I don't really understand, like, because it was going up and down. Maybe that's why I didn't really understand what you mentioned about ETFs. That was my question. But really, thank you so much, sir. God bless you.
All right.
And yeah, we'll make you proud sometime later in the future.
Okay, excellent. I'm looking forward to your testimony. Just like I said the primary difference, once you understand mutual funds, you can understand ETF. ETF work the same way mutual fund works. The difference is that if you want to buy mutual funds now, like your money market, you have to open another account. Let's say you already have a brokerage account. You have to open a mutual funds account with your stockbroker, right? But ETF is not that way. ETF can be bought directly. The same way you buy shares with your brokerage account is the same way you buy ETF. That's the primary difference between ETF and mutual funds. What is now the utility of ETF? What is ETF used for? It is you committing your funds to a funds manager to invest as the person deem it fit. They can invest it in stock, which is the case of Stanbic 30 that we checked the price. When the last 5 months ago, it was 380, whatever. You guys checked it just now while on this call. It has gone up to 850, right? So Stanbic 30 invests in the shares of 30 companies. When you invest in that kind of ETF, you are indirectly investing in 30 companies, right? Do you understand how ETF works now? But it's not only now limited to stock. There are some ETFs that can invest into property, right? There are some ETFs that can invest into bonds, into commercial paper, into several things. ETF can invest into anything. Yeah. Okay. You're asking that I unmute you. Okay, you can unmute yourself now.
Okay, thank you very much. Yes, I understand. I'm so sorry that you have to repeat something again.
No,
And
no,
the
it's
same
fine.
thing also goes for, yeah, the same thing goes for commodities, because I was like, chipping was chipping up and on, up and on, so I did not really follow well.
Oh, okay.
So
All right, for commodities, right? I've said that if you want to, they are more like alternative investments, right? You don't want to invest in shares, or you have invested in shares, you have invested in other in stock, sorry, in bonds, in commercial paper, but you want to still have a diverse portfolio. You want other things in your portfolio. You can invest in gold. Gold is a commodity that you can invest in. And there are ways that you can invest in gold. There are three primary ways to invest in gold. Number one is to buy gold directly yourself. Buy gold bars, gold coins, gold chain, gold. So gold is into three categories. You can do gold bars, you can do gold coins, and there is gold jewelries. You can do jewelries. Those are three ways to buy gold. When you are buying commodity yourself, commodity like gold yourself, the primary consideration is now the safety of it, the custody of it, because it's not just enough to buy gold. If you buy gold and you keep in your house and armed robbers come, they steal the gold, your investment has gone. So people now devise means to, how do I protect this gold? Number one way to protect it is through insurance. You can insure your gold. The other way is custody service. So most of all the banks that we have in Nigeria, all over the world, there's something called private banking. Under private banking, they offer custody or custodial service, meaning that I can walk into a bank and request for a vault. They will give me a small safe within the bank where I can keep my gold and all of that. So the bank charges me for that. It is not just limited to bank. There are even custody companies in Nigeria. I'm trying to remember what they call them now. Vault companies in Nigeria. The only service they render is they help you keep your valuables. They have facility vaults that they help you. One of them is Bankers Warehouse. Bankers Warehouse in Nigeria renders this kind of service that help people to keep their valuables. You just pay them a consideration. And if anything happens to it in their custody, they will pay you in full because they don't keep them. So that is how to do commodities. One way to invest in commodity is to buy commodity yourself. And I said, commodity is not only limited to gold. There are agricultural produce, which is also a commodity. Example, maize, soybeans, rice. We mentioned all of that. And I said, so how do you, as an individual, the truth is, you cannot really invest in that kind of assets directly. But institutions, big companies invest in those assets directly themselves. And I gave an example where I said, let's take maize. What end product do you need maize for? You guys said cornflakes or golden morn, right? If I am a producer of golden morn, I need maize to produce golden morn. Where do you think they get those maize from? They used to produce. Where do you think they get it from? One of the ways they can get it is through what is called backward integration. when the company itself now starts setting up farms, right? Set up the farms, they'll harvest it, but that process is cumbersome. A lot of them don't have that time and resources. It overstretches them. So they rather now say, let us go to, there's another market that is called Afex in Abuja. Afex already has all these farmers signed up under them. The farmers just cultivate, plant, harvest this maize, and sell it to Afex. Afex buys, and all these companies now go to Afex to buy off Afex and use it for their production. That is a way that companies can buy commodities directly. There's another layer of how you can invest in commodities. The other way that you can invest in commodity is through investing in that commodity. Look for a company that is producing it and buy the shares of that company. Example, if you want to invest in gold, you don't want to buy the gold directly. You can invest in JPaul Gold. JPaul Gold is listed on the Nigerian Stock Exchange. I don't know how much the price of the gold of their shares is right now. You can check it through your app. Buying the shares of JPaul Gold also means that you're investing in gold. The other way you can invest in gold or any other commodity is to buy the ETF that is focused on that kind of commodity. So there are some gold ETFs like APSA Gold. It's an ETF that is focused solely on gold investing. So this, and I also mentioned that when you start processing investing from the lenses of, or from the lens of impact investing than profit investing is also something to think about, right? Whereby you think of, if I invest in Okomu palm oil, Okomu is a company listed on the stock exchange that produces palm oil. If I invest in Okomu, it's not about the profit that they are giving me. The fact that I'm also playing my own role in ensuring food sustainability in the country. So that's the way to interpret investing. Because this is the last class, I want to try as much as possible to help us see how wide investment can be. That is not really, I'm not here to just train you about money. Money is good, but impact investing is better. All right, I hope I overflowed and explained that to you. So in case, and I did that because to make up for the connection that has been going on and off. So in case you have not gotten all that I said before, I believe that explanation would have covered for everything that we have really taught today. So thank you for asking the question, Lori. So it's more like a recap. Okay, so let's go on to the next person. Elizabeth, ask your question. You can unmute and ask.
Okay, good afternoon. Thank you very much for the session. It has been really impactful. So I hear you when you talk about impact investing, but I know the truth is right now, majority of us, especially because of the age we are in, at the moment, we're looking into profit investing till we get to the age of impact investing. So you know how you also mentioned that for stocks, or sorry, for shares, right? It depends on what your goals are. So you can be investing because you want to be a major shareholder in a particular company or for profit or the rest. But for ETFs, you're not investing directly in these companies. You're taking advantage of the stockbrokers who are now investing for you. So my question is, the way to gain in ETFs, is it to sell off when the price of the ETFs go high? Because this one is not about saying I'm being a major shareholder over the years. So I don't know if you understand my question.
I certainly understand. Yeah, of course. The same way, any asset that is traded on the stock exchange. So I need to quickly put that out. Any asset that is traded on the stock exchange, the best way to maximize profit from it is to sell off when the price is high. There will always be an element of capital appreciation, right? You can sell your ETF when the price is high and take out your money, right? And you can also get returns that the ETF itself or the fund manager itself pays out to you. So that it's still two ways that you can get money. Does it make sense?
I didn't get the second one when you said the return, the fund. Does ETFs pay dividend?
Yes, ETF pays you dividend as well. They pay you. They may call it dividend. They may call it interest. They may call it something else. But ETF will always pay you. Because what's now that's think about what's the gain. If you invest in a fund, what is your gain? It's not about just the price going up. The price can go up, that is good. But your major takeout is the interest that fund pays you. So they will pay you interest, yes.
Thank you very much.
Yeah, thank you. All right, so let me see this question. Mr. Shei, thank you for the opportunity to share this information to us all. I have learned a lot and I'm ready for the future. My question is, in the current economic situation, do you think these major companies on the stock market might take their money out? As we all can see that most of the major companies are all-time high in the market. I'm asked because I had to buy discounts or not premium. Do I think that most of the companies can take their money out? That is not very clear to me. If you mean that institutional investors that are investing in the companies, of course, they can take their money out. People can take their money out. It's just like you. The way, when we say that ETF, or when we say mutual funds, and we say you give your money to funds managers to invest on your behalf, these fund managers, what do you think they invest? They are investing in the same thing that you two is investing in. They are investing in the stock markets. They are investing in bonds. They are investing in treasury bills. They are investing in all of these things. So they look at the market as well. And sometimes when they feel that, oh, okay, we have made enough money, they can take their money out from there. It's possible, right? But your own goal also determines what you do and what you don't do, right? If you are a trader, because most of the institutional investors are traders. If you are a trader, you may want to sell off when the prices are high and enter when the prices are low, wait a while for the price to rise, sell. So you can do that as well, right? But if your question also covers that with the stock market close up, stock market can never close up. The market has been there for years, that will always be there. It's actually a primary driver of the economy. The market is not going anywhere. However, the market will always go through seasons of highs and lows. The word for it is, they call it bullish and bearish, bull and bear. The market, and it is global, right? And if you say you want to run to the US stock market, you want to start investing in the US, you don't want to invest in Nigeria, that's also an option that you can consider. But also note that there has been so many analysis, so many reports released that the US stock market is nearing a recession, right? It means that if you go and enter now, maybe it's that time that you enter, the market will now go down. And we also need to tell ourselves the truth that losing in a US stock is not in any way close to losing in a Nigerian stock. Example, if I have 1,000 units of Amazon shares, and say, I don't know how Amazon shares is right now, say it's $200 per share. 200, and I have 1,000 in it. $200 times 1,000. How much is that? That's $200,000, right? If in a day, there are times that on a single day, the market goes down by $3 per stock, per unit. So if my unit goes down by $3 on a day, calculate $3 times 10, and I have 10,000, and I have 1,000 units. That is $3,000. Convert it back to Nigerian naira. So do you have the mind to be losing $3,000 daily? So these are some of the things we don't tell ourselves. We only look at it from the high perspective. Oh, it will be increasing. The market is never stable. It goes up and down. So you need to measure your own risk appetite. And so sometimes naira, if you lose 10,000 naira in a day from the market, some people, it's not a big deal. But if you lose $3,000 in a day, some people will die. So look at what your risk appetite is before you invest. Yeah. So let's do Vivian, you can unmute and ask your question.
Okay. Thank you so much, sir, for this class. My question is about still on ETF.
You need to project your voice so I can hear you well. I can hear you, but you're standing too low. Ah. I can't hear you. I don't know whether it's my network or your network.
The first one about the can you hear me?
Yeah, I can hear you.
Okay, let me probably change my location. But can you hear me better now?
Yes, I can.
I'm literally talking inside my phone. Can you hear me?
I can hear you, Vivian. I can. Go on. Okay, someone said it's your network, so you need to fix your
so
network.
I think when you mentioned the S&P 500, you were like the
Yes.
top 500 companies. So my question
Yes.
is, do we have access, like if you want to buy that probably ETF, do you have access to know the top, like even if it's Stanbic 30, do you have access to know those top 30 or whatever 30 companies that they will be using that fund to invest in? Or like, so we don't know, do we have access to that? That's my first question.
You don't, well, I don't think it's something that is hidden. Do you understand? If they say S&P 500, I can simply Google it. List the 500 companies in S&P 500. Google will give you. It's not anything, any public investment, right? Is not hidden. It's mutual funds that doesn't really give that flexibility of you know, you knowing the nitty-gritty, where they are putting the money and all of that. It's mutual fund that does not give that flexibility. But ETF, I believe, gives that flexibility because it's traded on the exchange. So anything that is traded on the exchange is 100% visible. You can see everything that you want to see about it.
Okay. So my second question is on commodities. In terms of commodity, like especially agricultural commodities, when you buy into such commodities now, is it the rise and fall of that particular instrument? Is it based on the companies or institutions that buy them? Like I'm trying to like understand, okay, what will cause like the rise, and normally you see shares rise and fall and all of that. So what will cause it to increase? What will cause it to decrease? Something like that. I don't know if you get my
What will
question.
cause price of commodities to increase or decrease? There are several factors.
Like
Demand and supply.
agricultural specifically.
Yes, demand and supply can cause it to increase. Demand and supply. For instance, now that we're experiencing this foreign exchange crisis, right, where price of everything is increasing, of course, it will affect the market as well. To affect the commodities market. And you can say, Shebi, they are planting the maize is planted locally and all of that. Don't forget that when they plant the maize, they are supposed to ship it. They're supposed to use logistics to move it from the farms to the market. That's number one. Moving from the farm to the market, they use car that runs on fuel, right? The price of fuel is changing almost every day right now. So those are some of the things that influences the price, right? So, and this just occurred to me right now that individuals can also invest in agricultural commodities directly, right? I heard someone, I don't know, maybe it's a public news or just an office gist that someone was arrested because the person has ordered several bags of rice. And I said, how is that an offense? That is commodity investing at the minimum, right? You got the information, you just had the premonition that bag of rice will go to 70,000 naira per bag. And you had access to, say, 100 bags, and you also have stock in your house. You had access to know when it was 30,000 naira. And you also had the money. And you bought at 30,000 naira, 100 bags, and you kept in your store. And now that is 70,000, you start to sell. That's commodity investing. You don't have to be a rice dealer to do commodity. That's commodity investing at the minimum. At the minimum as well. Right. Does that answer your question? But of course,
yes,
there is risk also in that. What if you buy the rice and something happens to the rice? Or you buy the rice and the and the price does not go up as you have ever said, the price dropped instead, or the government just made a policy that drops the price of the right. So there is always risk in every decision that we make, right? So you just need to measure your own risk appetite. And I always encourage people to put the money in any investment. You know, you need to divide your investments into, if you're a starter, in case you have forgotten everything I've told you in the last 1 month, because I've said these things several times, you need to divide your investment into 2. If you're a starter, 50%, let's say you have 1 million to invest, 50% of that 1 million, first of all, before you do anything, first remove that 50% and put it in mutual funds. Because why? Because mutual funds is low risk investment. In mutual funds, you except let me see. I'm thinking of the condition that may make you lose your capital in mutual fund. Maybe the company the funds manager just went missing and you can't see them again. Which of course, I know anyone on this call won't do that, because I've told you what to look at before you choose a funds manager. You don't go and choose a mushroom fund manager. That's why I'm hammering these other guys, these ones that I've said, oh, they've been around for a while. I'd rather use them. If their process is cumbersome, I will wait till they open my account. In fact, if I have to go to their office physically, if I'm in Nigeria, I will go to their office to ensure that the right thing is done, because I don't want to put my money in a company that just started last year, and 2 years from now, there'll be nowhere to be found, because I'm investing long term. I'm investing 10 years. So these are some of the, when I say things, I'm not just throwing around words. I'm saying things based on experience and based on what I think is generally applicable, right? So I choose the funds manager. I put my money there, 50%. The remaining 50% is what I can take risk with to a certain degree. That's when I now say, okay, what are the other forms of investing that I can do? Let me take shares, right? I don't want to do too much stress. I don't want to do shares alone. So take shares. You have 500K left. Break that 500K into 500,000. Select one company. And please stop asking me to tell you companies. I've given the list several times. Even me, I'm tired of repeating the same thing. Because you give the list today, someone else will DM you. Can you please recommend stock? I've given you a list of 20 companies. Please, select the companies yourself. You have not hired me as an advisor for me to now sit down with you and, oh yeah, it is this, oh yeah, select this particular company. No. What I'm supposed to do is to give you a list of companies that I've done analysis on. Select anyone that your mind goes with. But some people say, no, just give me one, the exact one. No, I'm not going to do that, except you are going to pay an extra fee for that. Right. So select 5 companies within the list that you have been given. I've given you FMCG. I've given you banking stock. I've given you different companies in different sectors. Select 5 companies, put 100,000 in each of them, and move forward. Right. However, there's a guy that is also an expert in this thing. He said his own recommendation is 50, 30, 20. He said put 50% in low risk, just like I've said. But he said the other 50%, don't also put it somewhere. He said, now divide that 50%, the remaining 50% to 2 buckets, 30%, 20%. He said you can put the 30% in a medium risk asset. Medium risk asset like stock market, that's medium risk, right? Then the last 20% is one you can afford to gamble, that you can afford to do very high risk. Maybe a very good example, you want to start a business that you're not really experienced in. That's the 20% you should use. You want to, even if you have experience in that business, start with that 20% first, because for every business you start, this is the statistics, it's not talk. Almost everyone fail at their first 2 to 3 businesses. So if you're just starting your first business, it is 99% chances that you will fail at the first business. So use the 20% for it. In case you fail, right, you can count your losses and move on. And then, you know, but what people do is they're starting something, they will now go and remove everything that they have, put it into it. It is not a way to live life, right? Put the 20% into high risk asset. If you want to do crypto, put 20%. Is that 20% used for the crypto? If you want to do which other, because crypto is also very high risk. You want to do Forex, Someone has told you that he did Forex like this. He just became a billionaire from Forex and you want to try it yourself. 20%, put it. ETF is medium risk, right? ETF works like shares, so it's medium risk. Someone has been asking the question. I just thought of, so that I won't miss it again. So put 20% into that high risk asset, your own business and all of that. But what is more insightful that I like that he said, he now said, you now need to erect a brick wall in between those percentages. So between the 50 and 30%, there is a brick wall. Between the 30 and 20, there is a brick wall, such that you cannot cross from one to another. It means that if the 20% that you put in high risk is gone, let it be gone forever. Take your mind off it, move on. But don't now cross to the 30% or take 30% to now put it in the 20%. That's how people get themselves burnt. And let's say you now lose 30% again. Don't now cross, you now jump fence like people in secondary school. In my secondary school, then we used to jump fence when we don't want to sign exit. We jump fence to go out of the school illegally because we're hostel students. Don't jump that fence from 30% to 20% or from 30% to 50% to now take the money from 50%. No matter how much that investment promises you, please. If you see me, I'm literally kneeling down for you guys. No matter how interesting, I have money in mutual funds that I cannot remove it, even if my Transcorp goes from 13 naira to 100 naira per share, meaning that my 13 million naira becomes 100 million. And someone tells me in my dream, in fact, God woke me up in my dream. Maybe not God. Let me calm down. Someone tells me in my dream and says, withdraw let me say angel. And they tell me in my dream, withdraw your money from your mutual funds and put it in this your stock because you go up. I would tell the angel, please, you missed, maybe if that's what will make me richer than I am, leave me where I am. If you're going to lose anything, if you're going to lose in any investment, lose in such a way that your loss would be limited to, how am I going to put it now? Let your loss be that you lose and then you are not to the ground, pata. It's not a good thing where you lose an investment and hey, you not be push your hand on, hey, I'm dead, hey, I'm depressed. Why people do that is because they don't do these things that we teach them to do. All right, in order not to waste another time, I'm also watching my time. Let's take 2 more questions and we call it a day. Gifts.
Hello, can you hear me, sir? Good afternoon.
I can. Afternoon.
Okay. My question is just very short. I was asking, I'm not buying shares, I'm buying ETF, which is better for a beginner?
Well, it's not a yes or no answer. It's not something I can answer yes or no because both have benefit. But in my own estimate, I would say start with shares, buy shares, right? Do mutual funds. That one I will keep saying it too. Do mutual funds first. Anyone doing shares should have mutual fund. That is the principle. Because mutual fund is low risk. That's where you keep the bulk of your money. Shares or ETF is the money you want to risk because your ETF can go down. Your shares can go down. All right. So I think I've answered that one. Pio, are you there? Elizabeth, I've called you now, so please put down your hands. I think I've called you.
Hi, good morning. Good
morning,
afternoon.
Pio.
Yeah, thank you so much for the lecture so far. Please,
Okay, I can't hear you again. Maybe it's my network, maybe it's yours, I don't know, but I can't hear you again.
I checked for effect.
You checked for? You checked for? I can't hear you again. Okay, what's your take on AEF mutual fund? What's AEF mutual funds? You can tell me the full meaning of AEF. I'm not sure. So I'm answering the right thing. Let me know. Do you have access to historical data with ETF just like companies? Of course, yes, you can. You can Google it. I won't say it again. Any investment that is public quoted, note that word. Any investment that is public quoted, that means that you can find on the floor of the stock exchange It is public. You can have access to it. All right, Jennifer, let me take you last and then we'll call it again.
Hello, good afternoon, sir.
Afternoon.
Thank you so much for the class. Please, I have a question. I bought shares with UBA. I bought 400 quantity, but I got when I checked the app, I saw. Let me see what did I? Oh God. Okay, it told me that the following order types are not accepted on the SEC board of premium UBA. So I'm like, I don't know, is it that it has there's a quantity one has to buy or something?
Which shares did you buy? Which one? Which company shares?
UBA, sir. UBA.
You bought UBA?
I bought 400 quantity.
400.
Yes, sir. Yes.
What order type did you select? Under the order type, what did you select? Did you choose market price or limit price?
I choose market.
Okay, what in the so other parameters, what are the other parameters? I think you sent this to the group, right?
Yes, I did, but I didn't get a response.
Okay, what you do is please DM it to me. Let me check. It's probably something you did wrong with what you filled. Let's check. And then you may also want to the expiration. Like I said in the last class, when you are setting expiration for your order, select minimum of 10 days. Don't put that same date, because if they are unable to buy that day, it means your order will be cancelled. Okay. All right, thank you.
All right, thank you, sir.
All right, Pio, you can unmute yourself now.
Hello?
Hi.
Can you hear me now?
Yes,
Okay,
I can.
good afternoon. Yeah, so I said that I searched for effects and I couldn't find it. Is it that it's not listed?
You are searching for effect. Don't forget that we discussed effects under commodities, right? You won't find it under NGX.
So where can I find it?
So there is another kind of, so that's why I said NCX, Nigeria Commodity Exchange. You know, I said, if you look at the second point I said, I talked about it's being revamped right now, recapitalized and all of that. So that is where you will find commodities, right? Hello? Okay, I can't hear you again. But I also already answered the question though. Jennifer, ask your question, and that will be the last question for today. Gift, you can drop your question in the box. Okay, Jennifer is not answering. Yeah, Gift, ask your question. Gift, I'm on mute and ask.
I've already asked already, sir.
So put down your hands. Thank you so much, everyone.
Thank you, sir.
Thank you for your time. Please enjoy the rest of your day. Yeah. Oh, sorry, someone saying I would like to know how to interpret certain symbols on an investment app, e.g. Trove. I don't use Trove myself, so you may have to talk to, you can always talk to them. Call their customer service. They will put you through all these things. Whatever it is you're confused about, they will. Yeah. Then can we have a demo on how to read a dashboard, please? Yes, you have access to previous recording. All the recordings are on the Google platform, Google Classroom. Even after this month, the Google Classroom will still be active, right? Until say another 1 or 2 weeks. But I would advise that you should download the classes and store them on your own computers, because sometimes this thing becomes too much and then I start to take some things off because, you know, it's cohort after cohort and I need more space. I can't keep buying extra space every month from Google because to be able to run a Google Classroom and use data like at that level, you need to keep expanding your use, the capacity. Right. Thank you. Thank you, everyone, and enjoy the rest of your weekend. Bye.